have a fantastic promotion for new accounts at the moment. If you are interested in checking out the details, you can visit our Facebook page or you can visit our LinkedIn. Alternatively, you can visit the website Jalatoma Management. The required links are below this video. Speak to you soon. Good afternoon, my name is Jordan Lambert, Market Analyst at Jalatoma Management. And so the fall continues, but there could be a bottom in sight now that gold miners have been cutting back on production as it becomes less economically viable to maintain output levels when the price of gold is around $1,200. Rising real short-term rates attributed to speculators betting that the Federal Reserve will increase rates during 2014 has contributed to gold being shunned to the sideline. Some Fed officials have stepped out commenting that speculators' actions are not aligned with Ben Bernanke's statement last week in regards to the US economy and his language in regards to the Fed's next move being data dependent and flexible. However, the speculation has forced gold down and given the bears some control. Taking a look at the weekly chart, 1159 is an important level. We can draw a Fibonacci retracement grid starting from October 2008 up to the peak of 1921 in September 2011, and since 2011 September it has been on a general downward retracement. 61.8% is usually a very strong support level, and a breakthrough there would signal that the upward trend for gold over the last 5 years has come to an end. There obviously we have we are in a bear market if we receive a 20% decline from the last peak, but also a 61.8% Fibonacci retracement line is an important level to assess whether we are still in a bull market or the trend has changed. Obviously this is a very long-term perspective, but it is important. And this 1159 level, which sits at the 61.8% retracement, is also a level that found support in May 2010. So 1159, a support level and a Fibonacci level. So any traders looking to dip their toe into the market and go long should maybe place their stop below 1159 because it should provide some support. However, price this morning did go as low as 1179 and it is back up at 1201 right now. So price hasn't actually hit 1159 yet. It looks like it has hit the 61.8% Fibonacci line, but it hasn't hit it yet. It's $20 away. So bulls will not find comfort in that because it may come back and actually test 1159 before it bounces higher. Let's take a look at the 4-hour chart. So on the 4-hour chart we can see that we have a bullish hammer, and it's almost a perfect bullish hammer because the shadow is multiple times longer than the body, and it's also equal size to the previous bearish Maribozu candlestick here. So that does signal that a reversal is possible. However, any bulls looking to buy off the back of this bullish hammer need to be aware that we have medium-term bearish trend line here. So price could intersect with this around 12.15, and also this morning we have a short-term resistance at 12.07. If I just so this horizontal line here just shows short-term resistance around 12.0708. So yes, we do have a bullish hammer, but it could find resistance at 12.0708, and again as price intersects with a medium bearish trend line possibly about 12.13. So there is a probability of a bounce. The stochastics is also generated a buy signal as it's just crossed up above a 20 and crossed the slow line. So there is a good probability of a bounce, but it could be limited. But also fundamentally now, if the gold miners are cutting back on production, that could limit supply, which would be good for the price of gold. So there are a few things to suggest, to contemplate, but also the fact that we haven't bounced off that 1159 level yet means that the bears could attack that level before we see a bounce of any assertive direction. Thank you very much for listening to me. Have a nice weekend, and I'll speak to you again on Monday.